Welcome back to Good Morning Kenya. This is Entertainment Thursday. My name is Mike Migo. Our first conversation, investment simplified. Hapa tunaongea mambo ya investment in the simplest language that you will understand, especially for you young person who want to make investments as early as now. This is Future Voices and welcome. To talk about this aspect of investment, in studio I'm joined by Stormzy Mwendo, who is the founder of Basquiat Capital and is also an innovation engineer. Karibu sana.
Thanks so much, Mike.
How are you doing this morning?
I'm doing great.
Uko fiti?
Kabisa.
Kabisa.
Yeah, for sure.
Sasa unajua, I'm interested because I saw innovation engineering. It piqued my interest. And that is our starting point before we even get into the investment aspect.
Yeah.
What is innovation engineering?
Yeah, so that's actually a role I started quite a while ago, actually here locally.
Yes.
And the idea was just to, transform and execute on ideas, so like wild ideas. So we tried a bit, but it was very much in its infancy. So right now, the term has pretty much changed, and you could consider it like something that everybody is now doing. So if, for example, even if you look at folks who are coming up with content right now, those you could consider them innovation engineers because they're coming up with new ideas for, content that's basically fresh for the first time. So yeah, I could more or less call it just executing on fresh ideas, new ideas. So that's kind of like the whole gist around it.
If that is the direction one wants to take, how would you say it mitigates the risk of pursuing big ideas, innovations, and bringing about novel solutions?
Yeah, I mean, at the end of the day, like I mentioned, because it's something that most people actually do on a day-to-day basis, just trying to find something different. Maybe there was a certain way that things have been done for a very long time, and then you just break that and say, you know what, I want to try something completely different. So it's very possible for anyone, even yourself, to say, you know what, let's just flip this model / idea upside down and just go ahead and see where it takes us, and then we'll be able to learn. Whether it fails or it succeeds, it's still a learning opportunity.
Even for forward-thinking organizations that are geared towards making or pursuing purposeful action and prudence when it comes to finances, is this something that they can pursue?
Yeah, 100%. Especially right now in the age of AI, it's very easy to go ahead and come up with absolutely evergreen. So the idea here is you can go ahead and get into another niche. Say, for example, you are a doctor and you're trying to find out a new way of doing something. You don't have to look within the industry. You can look outside. You can probably even look at engineering or architecture. There's just something that they do there that you can probably pop into your whole niche and whole system and see if it's going to go ahead and make a change or make a difference, to push the field forward or to push your career forward or, even to push your pocket forward.
So this is something that you would say, in the colloquial terms, thinking outside the box.
100%.
Yes. Let's say we have a problem of X organization. What does the process look like when it comes to innovation engineering? Where do we start, and how does it look, the whole process of making sure that this problem has been addressed, solved once and for all?
Yeah, that's a fantastic question. And the answer is pretty simple, just coming back down to first principles. So first principles is something that folks like Elon Musk have been doing. So I'll give you an example of how they have done it. So you have SpaceX, right?
Yes.
So what happened is, back in the day, NASA were the ones who used to build the rockets that would try to take people to the moon and all that kind of stuff. So what Elon did, he was like, okay, first, I need to understand how a rocket is made.
Yes.
So he broke it down up until the minuscule level, the minute level.
Yes.
Rocket is made of these metals. These are the materials that are required. This is the fuel that needs to burn, etc., etc. And then he built it from the ground up using specific, because the other way you would have done it is to go and buy a rocket from NASA themselves.
Exactly.
But it's like, no, let me just see how I can be able to build this, and he's done it for cheap now. And now he's able to launch these rockets at scale. And that's where the whole goal of Mars and taking people to Mars has come from, and etc., etc. So it's just first principles first to get the root cause and root issue, then building from the ground up using specific ideas from different niches.
Yes.
Yeah.
How would you rate the uptick of innovation engineering in the country today?
Oh, I think it's definitely there, but I don't know if people actually use that term. But at the end of the day, people are doing, even up to the mama mboga level, if you could say that, people are finding new ways of distributing, of producing, of marketing, for example. So it's there, it's in our lives. It's just that people don't know that this term actually exists. And at the end of the day, the whole thing is, if you know how to do it, then you really don't need the title.
Actually, that is true, because even you look at small businesses, even in the estates, when it comes to rendering their services, you can they are doing deliveries. They're doing deliveries away from what we are used to. Unataka kitu unaendea. So siku hizi unapiga simu, hata kama ni nyanya unataka, they will be brought to the house.
Yeah.
So I think that is also an aspect that is changing.
Yeah, for sure.
Yeah. So final question on this aspect of innovation engineering. What do you think will be the role that it will play going forward for any business that wants to, say, break even in the shortest amount of time?
Yeah, that's a great question. At the end of the day, it always comes down to the models, so how the business makes money and generates revenue. So if there is something that they can probably, quote unquote, steal, as they say, in the best way to become a good painter is actually to steal some ideas, etc., etc. So if you could just steal some ideas from specific or different areas. So for example, if we were, let's work with the same businesses in the estates, So what are people asking for? What do they come to buy?
Exactly.
And what do they usually go ahead? So you're looking at from the value chain from farm to table, for example, farm to fork. So people want to buy tomatoes, they want to buy onions, so that they can make beef stew or something. So what do they usually do? They'll take the tomatoes, chop them up, etc., etc. So innovation there could be like, you know what, you come to buy from me, you find them chopped and they're already mixed. So your job is just to go and toss them in the pan, and you just need to fire it up, and then the next thing is you put in your beef and you're good to go. So that's just like something, because you're looking at a problem / pain point, and then coming up with a solution around it to make the life of the customer much better.
Yes.
Yeah.
Definitely. Let's get into matters investment, because everybody wants to invest, make something in the future, because investments depend on the timeline that maybe you want to make something. But from your own understanding of investment, how do you define it in the simplest words?
Really, really good question. And in the simplest terms, it's just delayed gratification. So I'm delaying my happiness right now from the money that I'm making, so that I can enjoy it when I'm not very, very much able to now wake up and do things, etc., etc. So I'm just delaying that for later. Yes.
So, and because I ask that because there are people who think, who want to make quick money. And today, social media is awash with things like forex trading, which actually has caused a lot of uproar. People are flashing, showing flashy lifestyles, and they're attributing it to forex trading. Actually, let's get into it. What is forex trading in real sense, as opposed to what is being paraded on social media?
Yeah, so I mean, in terms of like, the whole industry has just been very glorified for a very long time. And, there's been a lot of, this is even in the 80s, they started this whole thing in the United States, that, they were posting videos on TV whereby people, you'd show a lady at home making some trades on her computers. And then from there, she's able to make X amount. So the narrative started quite a long time ago. Now, forex in its essence is necessary, because at the end of the day, people have to buy and sell goods in different areas around the world. So you need to exchange money. But now when you look at it from the aspect of you, Mike, and myself are sitting on a computer, not holding physical cash, and then making a couple of button clicks on our computer to make a couple of dollars. To be quite honest, it's a system whereby people are just being exploited. And unfortunately, people, 90%, in fact 99, will lose money, and that is a very, very strong fact. It's even written there. I'm not the one who's coming up with the, these terms or these facts. So you always have to look at it from the perspective of how has it worked for, you know, the people who came before us. And if you look at the greats like Peter Lynch, Warren Buffett, Charlie Munger, you know, they did it the long way, the long game. They did Warren Buffett and Munger started seeing some significant money when they were much later in their life, in their older, latter stages of their lives, in their 40s, 50s, and that's usually the prime time for a human being. So the whole get-rich-quick scheme through Forex and all that kind of stuff is just a means to an end for some people to make money off of other people. Yeah.
All right. When it comes to investment, you are an investor because by the time you were starting your company, it was an investment.
Yeah.
How would you say, or what would you term as the safest type of investment?
Yeah, so I think I'll throw it back to you and ask you, is it in terms of safest in terms of risk or safest in terms of...
Because, okay, I'm asking it from the perspective of a person who wants to, I have this money, I want to invest it, but I want to make sure that my money is safe. That, yes, there is risk, but still there is some degree of safety. So what investment, granted I do not have that information of the types of investments that I need to make, what is the safest, what would you say, let's say, what would you advise me to invest in?
Yeah, I wouldn't say this is what I'd consider financial advice because of course we're on live TV, but for that case we can just use a couple of examples. So basically it always comes down to the level of risk appetite someone has. And usually you just take, I think it's 76 minus your age, and then you'll know how much you need to allocate towards more riskier assets. But when you look at less risk, you're looking at things like government bonds. You know, the government will always, quote unquote, have money to pay you back because they'll get money from taxes, etc., etc. So it's slightly less riskier. And then now we start getting into more riskier territory. So looking at equities, aka shares or / stocks. And then we start moving a bit forward. You start looking at futures. We start looking at options. So these are like highly complex financial products. So they all increase in risk when you start getting more complex. So the easier it is, the less risky it is in terms of understanding. Because when you say, I want to buy a bond, you're basically saying, I want to lend to the government, plain and simple.
When it comes to risk, is it always that the higher the risk, the higher the amount of return on investment? Is it usually the case?
That is usually an intended case, but it's not guaranteed. Yes, there's always that quick disclaimer by all financial products or companies that will tell you there's a chance this might lose money, and you know, past results do not guarantee future results as well. So you always need to know that when you get into something. But at the end of the day, the higher the risk, essentially the higher the reward.
People have, well, you go to social media, and even TikTok, Facebook, people right, left and center are talking about money market funds. But do you think that prevalence has taken root, especially on social media platforms? People are getting that advice left, right and center.
Yeah, I mean, money market funds have been there for a very long time, but as you said, you know, right now they are very popular. And they do give a certain level of rental, quote unquote, which is basically interest. However, of course, they do literally what I just talked about. They lend to government and buy bills and bonds and all that kind of stuff. And the ability for someone to be able to access this at a very short cadence. So, for example, if I place the withdrawal request today, I'll probably get the money tomorrow. So it has a very fast turnaround time. It's very liquid. But for that, you know, there's always a cost associated with it. And, you know, the money market fund managers and stuff like that will charge a fee, so an annual management fee. And so if you do the math, you know, technically, yeah, it's fair. It's better than keeping your money in the bank. But at the end of the day, it's not very glamorous.
It's low risk.
Yes, it's low risk. Yes.
Yes. When you look at the investment landscape, how do you think the advent of AI is impacting on it these days?
Yeah, for sure. So I feel like AI has made, for example, my job very easy when it comes to analyzing companies. And it'll get better, exponentially better. Of course, now they're saying that, you know, we've hit this quote-unquote peak because of the processing capabilities of the GPUs paired with the large language models that, you know, work on ChatGPT and any other AI product that is out there. But slowly we're going to see more significant inroads and gains from AI products. Such that they can make decisions on behalf of human beings. And when we get there, for sure, that will be an amazing time because it will now be democratized. People can be able to now make decisions confidently with AI as companions. Yeah, so we're going into that direction for sure.
So, you know, as an investor and a founder of a company, what would you say are the biggest lessons that you have learned along the way? What are the mistakes that you made, and how have they enhanced your decisions to be where you are at today?
Yeah, so what you just talked about earlier, the whole get-rich-quick scheme, that is just, yeah, it's anyone who's selling you that, you just always need to have very, very large red flags waving in front of your eyes because of that promise. So like I mentioned, you know, the ones who walked before us and have been super successful, they did it in a way that is patient, it's long term, and there was not a lot of velocity. They didn't have a lot of twitchy fingers, you know, buying and selling really quickly. It was a process, a very long one. So for me, learning that, I had to learn the hard way by losing money, so quote unquote paying my tuition fees to be able to learn that, hey, you know what? The right way is the long game. Play the long game, play it safe. You want to survive fast. When you survive, the rest is easier. Now you'll be able to now build the wealth and money over time. So yeah, I think that's the major lesson to share with you and the viewers today. It's the long game that is the one that always pays out at the end.
Yeah, you know, everybody, if I'm not wrong, almost everybody, if not all, wants to throw money where they are sure that it will bring good return. But how would you say, or what is the role of research and analysis before making an investment?
Critical, extremely critical. You have to do due diligence. It's like picking a partner to marry. You just don't go and just say, hey, I've seen this person from the street, I'll go and pick them, this is the one for me. You have to do some due diligence. You have to look at, you know, health. You know, you have to look at the family. You know, really, really nitty-gritty things. So when it comes to research and kind of the analysis, number one, you have to be very good at, or rather, love reading, because there's a lot of information that is. For example, if you're buying a stock or a share of a company, they will provide it publicly, and you need to read through this, and it's not a few pages, it's almost like a storybook. So you have to understand the business from top to bottom, in and out, and then from there you can be able to make a decision. Yeah.
What other mistakes would you think from your perspective, that any person who is, especially young people, what do you think are the mistakes that they would avoid today, so that even if they're investing in high risk or low risk investments, at least they know? What do you think they need to know in terms of those mistakes they should avoid?
Yeah, for sure. So I think the first mistake is always rushing and just saying, yeah, I've seen something from social media or I've read something, let me go ahead and do it. You need to understand. So if you can't explain whatever it is that you're doing to a 5-year-old, then don't expect yourself to be able to be utterly and completely successful in the long term. So I should be able to explain to a 5-year-old, and if they understand, then I'm good. I've also understood what it is that I'm doing, and then from there I can now continue building upon it. So that's one mistake, you know, not understanding what it is they're doing and looking at it from a monetary perspective. So if you look at it from a, of course, there's always you have to look at the end goal, which is the pocket, but you also have to look at now the underlying risks. You know, what if I do this versus going to school? If I do this versus starting off and working a job first and then build my capital, etc. What are the trade-offs? So, you know, just doing a SWOT analysis on something. Yeah, and so if they're able to do that, or if we're able to do that, because, you know, I'm still young, we're still Gen Zs, yeah, we can basically just set ourselves up for future success.
Yes.
Yeah.
Do you think they are also overlooking the aspect of gaining skills first and looking for the right knowledge?
For sure. Yeah, you've answered the question. Yeah. For sure.
You know, you've started from somewhere and you own what you own. You have built something. How would you advise someone who wants to formulate or to be like you, formulate something that will in future go to something big?
Yeah, I think at the end of the day, you know, the good thing is whenever people reach out to me, whether it's on social media or through email, they're like, how do I get started? I'm like, hey, you know what? There's a lot of free information out there that you can consume. It doesn't have to be from me, but there's just a ton of resources in this information age that you can use. You can even use the AI agents or an AI chatbot to just get a quick brief and then now build on that knowledge. So the idea is first consume, and then make your own judgment. You don't need to have other people telling you in your ear, do this, do this. I mean, you know, I'd assume, you know, you are decent enough and sane of mind enough to be able to make a decision on your own. So you basically call your own number and say, this is what I want to do based on the information that I've gotten. But yeah, at the end of the day, if people always, you know, kind of like reach out to me and they ask for help, I'm like, yeah, cool. I'll give everything I've learned for free. We have resources. We have a community where people can now just come and just consume free lessons, get free information, and then from there they can go ahead and make a decision that I mentioned. Yeah.
You know, as I was also researching about you, I saw something that piqued my interest. And you talked about fundamental analysis, AI-driven momentum signals, and cash-resistant risk scoring. Talk about that combination.
Yeah, it's a killer combination right there. That's where the sweet money is made. Yeah, so fundamentals is basically simple. So say, for example, you and I have a company, or you have a company and I'm looking to invest.
Yes.
I need to understand you as the person. Who is Mike? How has he run his company? What are his philosophies when he approaches, you know, like things like his compensation, how he takes care of his staff, how he takes care of his customers. And essentially just who you are as a person, so that, you know, we don't find you on a Coldplay concert, you know, hugging someone, and it becomes a story. But yeah, so there's that, and then now, of course, now the financials. So basically, how is your company performing? Are you making money quarter over quarter? Are you growing? What are the things that, you know, the company is doing to generate revenue? So with those two, you're good to go. Then now you add in a bit more of, you know, cash resistance and seeing free cash flow, how you're able to generate and deploy that free cash flow. Are you doing stock repurchasing, or are you doing stock buybacks? Are you doing are you putting more money into R&D to fund and bring in more innovation engineering into your company? Things like that. So when you look at those things holistically, and then you combine them, it makes the investing decision much easier, because you can actually have now a full view and understanding of now Mike's company when I want to make a decision to go ahead and buy a share.
You mentioned something, and I think it would be good for the viewer to understand what R&D is.
Oh, yes. Research and development.
Nice.
Yes.
For a person, I want you to give your final remarks to a person who wants to get into the investment landscape today. What is your advice? And I'll take this as your closing remarks.
Yeah, thanks. So basically, think the long game, plain and simple. Start small. I started off with $200, which was not, okay, back then it was a decent amount, but you know, you just slowly grow it over time. I always tell folks, you know, you can start even with $10, you know, that's like 1,290 shillings. Just start slowly by putting it in a very less risky asset or a asset class or product like an ETF, which is an exchange traded fund, and then just see that grow as you continue now consuming more information for free, because this information is free. And then be able to just make a decision much later on how you want to now deploy your capital, whether you want to go ahead and get into real estate or get into lending government through bonds and bills or private equity, all the kind of things. Or by then you'll have had a lot of information in your brain to process, and then from there you can make a decision. So yeah, that's that in closing.
Indeed. Thank you so much, Stormzy.
Pleasure,
talking
Mike.
about simplifying investment to the viewer.
Absolutely. Thanks.
That is Stormzy Mwendo, who is the founder of Basquiat Capital, and also he's an innovation engineer, and I hope you have learned a thing, all three, from this conversation. Before we go, I want to interest you with a quote for today. Happiness is shared. Happiness shared is happiness doubled. That is actually a Swedish